Good morning. What a lovely day. And welcome to the Computershare 2016 Annual General Meeting. My name's Simon Jones and I'm your chairman. We have a quorum today and I have pleasure in declaring the meeting open. This is my first AGM as chair of your company, and as I said last year, I have extremely big shoes to fill, but I will try my best to do so. Let me start by introducing my fellow directors. We have the very focused CEO, Stuart Irving, the ubiquitous Chris Morris, the extremely intuitive Penny McLagan, the forthright Les Owen, the very contemplative Marcus Kerber, the extremely diligent Tiffany Fuller, and the effervescent Joe Velli. Delightful board to work with. Thank you, everybody. Also attending the meeting are the representatives of our auditors, PricewaterhouseCoopers, and Bart Oudverlink is also in attendance as a representative of our lawyers, Minter Ellison, and I think, Bart, you've been here for 25 years, probably? Bar one. The minutes of the annual general meeting of the 11th of November 2015 are available for inspection by any shareholder by contacting the company secretary, Dominic Horsley, who's in the front row. The notice of meeting was distributed to all shareholders and copies are available at the back of the room. I take the notice of meeting as read. We'll begin the meeting with a short presentation by myself, followed by one from our CEO, Stuart Irving. This is a very exciting time to be on the Computershare board and to be a shareholder of Computershare. Whilst we're over 30 years old, and our beginnings were very close to here, probably about 500 metres away from here in Abbotsford, but this company is evolving, changing and growing. Since our start, we've grown to become a strong, trusted, intelligent, tech-savvy and highly capable and well-capitalised company. The board's proud of the people. We're proud of the work we do for our clients and our hard-earned, or I should say well-earned reputation. We have clear, logical and practical strategies for growth, profitability and managing our capital. And after my address, Stuart will talk in more detail about each one of those. But let me start by just reminding you of what our company does. We're a leading provider of administration services in our selected markets. We administer complex, often large and high value transactions from multiple parties in a timely and accurate way across several continents. Our strategy is to be the leading provider of those services in the markets we select to go in, by leveraging our core competencies to deliver outstanding client outcomes from very engaged staff. And at this point in time, where we see an inflection point in our earnings growth, we have multiple growth drivers. We have organic growth strategies in mortgage services and employee share plans, and we're investing there for growth, and you would have seen some of that this year. These growth strategies are largely within our control. And we have macro growth drivers, structural big picture trends that can assist us, such as the increasing compliance requirements, the ongoing requirement for efficient processing, timely processing and payments. Equity remuneration becomes a bigger thing, and even one day, hopefully, interest rates might go up, and that'll help us as well. Let me highlight how our business strategy drives our financial model and returns. Over 70% of our fees recur, and this consistency and certainty is very important. It drives our ability to make sensible investment decisions and reward you as shareholders. It also drives our cash flow. Last year we generated $347 million of free cash flow, and we deliver a high return on equity at 27%. With these returns, we're able to pay a steady, growing dividend over time, and we can buy back shares at appropriate times to enhance returns. I'd like to share with you now some of the global highlights of our global business in this last year, 2016. There are some big numbers here. We managed 15.7 billion daily on average of client balances. We serviced 158 billion of mortgage balances, and we maintained legal title on over 20 trillions worth of assets, over 125 million transactions. Those are big numbers. You can see some of our market shares, achievements and awards on the slide behind me. We were independently ranked number 1 in registry in the UK for the 7th time in 10 years with a positive score of 98%. And we were voted in the top 20 of the most attractive companies to work in Australia. We've launched new prototypes and products showing an increasing commitment to innovation. It's one of Stuart Irving's biggest achievements. As ever, technology remains at the centre of everything we do. And as we approach this positive inflection point in our earnings cycle, we do it from a resilient 2016 base. Today, we reaffirm our guidance that in constant currency, our earnings per share should be slightly higher in 2017 compared to last year, 2016, where we delivered 55.09 cents of earnings per share in line with guidance. We've increased the total dividend last year to 33 cents per share. That's a rise of 6.5%. Over the last 11 years, we have tripled the dividends, as the chart shows, from 13 cents to 33 cents per share. And that works out at almost a 10% compound annual growth rate. The world's a complex and dangerous place. We take risk management very seriously at Computershare. As chairman, and previously chairman of the Risk and Audit Committee, I can assure you it's a consistent high priority for our board and management team. Whilst we strive for profitable growth and enhanced returns to reward you, managing risk is just as important. We never take for granted most of our clients, in fact any of them. We treasure their trust. We note the regulatory frameworks that we operate in, and we know that we have to carefully manage within those. We've established risk management processes, and we have governance embedded all across our business. We'll continue to monitor and manage risk and continue to enhance our processes and controls. You can never guarantee that an issue won't occur, but I can assure you that we will do everything we can to mitigate any impacts. Let me also talk on possibly an even more upbeat topic. Chris's focus as chair was very much on good things, and his focus on change a life was significant. We've maintained that, and last year our Change of Life program, which receives contributions from employees matched by Computershare, attracted several large-scale projects. We worked with World Vision in Kenya, where we developed many community learning centres. And we also worked alongside with One Seed to build community forests in Timor-Leste. We're honoured to be a small part of these great and successful programs, and we look forward to continuing to share the benefits of our progress. Before I hand over to Stuart Irving, our CEO, I'd like to thank all my fellow directors for their support in this my first year and their tremendously wise counsel. I'd like to thank Stuart Irving and Mark Davis, our CFO, for their tremendous contributions to the business, and all our team around the world for their dedicated efforts in tough times, and probably even more so our clients and our shareholders for their much appreciated support. Thank you very much, and I'll now ask Stuart to give you a presentation.
Thank you, Simon. I also want to add my welcome to all our shareholders to our AGM. It's always nice to see so many familiar faces. I was just reflecting, I've been with Computershare for over 18 years, almost 19 years, and I was just looking around, and every chair I have served under is in the room today, so it's lovely to see you, Sandy. Although I was a little bit perplexed when my first ever boss at Computershare walked into the AGM today, Mr. Craig Ladd, and I'm worried that he's going to ask me technical questions on some of our systems and go back. Anyway, today I'm going to give you an update on the progress of some of our key strategies and how we're all about improving returns for our shareholders. We're really focused in 3 areas. 1, driving growth. 2, enhancing profitability. And 3, complementing that with capital management. And I'm pleased to say that given the progress we are making on these fronts, our confidence in our earnings outlook is rising. Let me talk about some of the fundamentals in Computershare. As we know, over the last couple of years, we've had a sort of strengthening US dollar and also a decline in interest rates. This has been a big factor in our results. The chart behind me strips away these 2 factors, which are absolutely outside our control, and it shows that our management EBITDA since 2013 has actually grown over 46%. And that's an annual growth rate of some 13.5%. And I think that's an important chart when you strip out the things that we can't control. But let me take a minute to remind you of some of what we do and where we do it. As you know, our headquarters are in Melbourne, but we operate in 20 countries, and we now have over 16,000 employees. We generate over $2 billion of revenue, with almost half of that generated in the US itself. That's why we report in US dollars. Australia and New Zealand these days contribute around 15% of group revenues. Our traditional businesses, which is registry, corporate actions and plans, are just over 50% of group revenues, with the business services segment now 30%, as we continue to execute our mortgage servicing growth strategy. That equates to almost $320 million of revenue in mortgage services alone. Now let me talk you through some of the highlights of our strategy. The first pillar is growth. Let me be clear, there has to be growth. Investors demand it, valuations require it, and of course, as you know, growth is in Computershare's DNA. But it has to be sensible growth that is profitable and comes with good returns on capital. Our focus is on organic growth. Our business, run well, is capable of delivering improved returns. That's our main focus. Our investment in mortgage servicing and plans will help drive that, and I'll talk about these businesses a little bit later on. The second pillar of our strategy is to improve profitability in our more mature businesses, and I'll update you later today on the second phase of our productivity plan to help drive efficiencies in these businesses. And finally, our third pillar is capital management. We use capital management to complement our earnings and ensure these cash flows are used to drive the best returns for shareholders. We're in this business for the long term, and we optimize the debt on our balance sheet. On the acquisitions front, they have to make compelling strategic sense. They have to bring a capability or an entry to a market that would have far more high cost of difficulty and cost in building the same ourselves. And it has to be a business we can build and grow. And finally, our dividend. As we heard earlier, it's an important part of how we think about rewarding our shareholders. We've never cut our dividend. Our ambition is to continue to reward shareholders with a steady, growing dividend over time. And I want to talk a little bit more about mortgage servicing. Now, we've been in this business for almost 5 years. We started small, and we've been building scale and learning through the journey. We have strong systems, robust processes, and that we continue to invest in. And its core, it is an administration business that operates in a highly regulated environment requires complex transactions to be accurately managed in a timely way for large numbers of stakeholders. That's what we do well at Computershare. So what is the size of the prize then? What are we trying to do? Well, to try and help people understand the opportunity, we've laid out some financial metrics on the slide behind me about what we're trying to achieve. We're looking to build the US business to service approximately $100 billion of unpaid principal balances of mortgages. We believe at that point the business will have an optimized blend of revenues in the owned and subservice loans in both the performing and non-performing sectors. That blend is the best way to build a sustainable business that delivers the right return on our capital. Once we reach that scale, we would generate over $350 million of revenues in US servicing. And our cash return on capital, which includes tax and the cost of replacing the mortgage rights that amortize, should be around 12 to 14%. And on a $400 million capital base, that's around an additional $50 million of free cash flow for shareholders. Now this year, we took 2 significant steps in executing our growth plans in mortgage servicing. I'm pleased to say that since completion, Capital Markets Cooperative, or CMC, has grown, and our purchase program to build scale is on track. I also spent a fair amount of time in the UK this year, which was lovely because that's where my parents were. But we were able to get a very sizable contract from the UK government, which was the UCAR mortgage book. And that integration is on track, and the expected synergies are beginning to be realized. Our second long-term growth business is employee share plans. We still have a view that equity will continue to be an important and growing part of employees' remuneration, and that companies will continue to want to reward, retain, incentivize, and align their employees through equity ownership. Post-Brexit, we have seen an interest rate cut in the UK, which will mean a further impact on margin income in that business because we do hold cash balances for employee plans. But we're seeing that partly being offset by transaction fees, as many UK-based employees of non-UK listed companies take advantage of the lower pound. We've also been investing heavily in our technology. Our CIO actually spent a lot of time in the UK this year as well, strengthening our offering to clients with new technology developments to improve our competitive position. Technology is also a major part of our strategy to improve our profitability in the US. As we saw earlier on in the slides, the US is an incredibly important market for us due to its size and its scale, and we give it considerable focus here in Computershare. We have our largest registry business in the US, and our goals are to manage the revenue there, enhance its profitability, and leverage our assets. Through the quality of our service, and over time, we've really earned our clients' trust, and we have really long-standing relationships. Our average length of contract in the US is over 18 years with clients. Now, we've got a strong focus on offsetting attrition through increasing the number of shareholders we serve, either through the IPO market or spin-offs. And I think one of the highlights in 2016 was the excellent progress we made in relocating a lot of our operations into Louisville, Kentucky. We also identified another sort of broad range of suites of products that we can actually sell into our clients and grow organically in the US. And we expect to deliver these additional revenue streams over time. Our plans are to target new markets, such as private companies that have not quite IPO'd yet, or real estate investment trusts. And we'll lever our strong customer bases in registry and plans and expand our other businesses in the US, such as class actions. So whilst we've been focusing on driving improvements in the areas we can control, let's not forget the other major potential driver of profitability in the future for Computershare, and that's our significant leverage to a rising interest rate environment. Last year, our average daily balance was over $15.7 billion of funds we held on behalf of clients. And our strategy over time has been to grow these balances. The interest we earn on these cash balances has actually fallen by over $70 million since 2013. And it will fall again in 2017 as we feel the impact on lower rates. Yep. And we do include that factor in our guidance. However, if the yield that we achieved on these balances increases in our markets by just 1%, Computershare would earn almost $50 million of profit before tax on an annualized basis. So I think the leverage to interest rates is an important case for any investment in Computershare. But let me return to today's priorities and again focus on the things that we can control. Today, we're announcing the details of the second stage of our group-wide structural cost review. Our move to Louisville was the start. That program is underway and well advanced. Our assumptions on the savings, cost to deliver, and timings are unchanged, and we show them here in the chart behind me for completeness. But we've also been working hard on identifying other areas for productivity gains, and we're now sufficiently certain that we can disclose these and the expected savings and costs. For stage 1 and 2 of the structural cost review, we expect to be able to deliver benefits of between $85 to $100 million. The new stage 2 on its own, not including Louisville, should deliver between $60 to $70 million of savings. And I think that's very, very significant. The benefits of these savings will take time and investment to achieve. Some are technical and complex, and others are sensitive. Once again, technology is a major contributor to these efficiencies. We've started to execute on these initiatives this year and expect the benefits to start to flow next year and beyond. However, we're not going to stop there. We will continue to work the cost line as hard as we can in Computershare. Now, moving on, let me comment on how the year has begun. Trading for the first quarter of the new financial year has been consistent with the same period as last year. Encouragingly, our growth, profitability, and capital management initiatives combined are more than offsetting the headwinds of lower interest rates and reduced margin incomes. And given current trading and the outlook for the remainder of the year, we affirm earnings per share guidance for FY17. That is, in constant currency, we expect earnings per share to be slightly up on FY16. So as we conclude this presentation, let's recap on some of the highlights. Our FY16 results were resilient. We have set out our strategy, we are building our capability, and we are investing for growth. In FY17, that's a positive inflection point that is approaching. We have affirmed earnings guidance today, and the first quarter has been consistent for us, and that's a great start. And I really look forward to giving you another update at the half year in February. It's also appropriate this time for me to thank the board for their continued support and guidance, as well as my senior management team around the globe. Especially to Mark Davis, our CFO, who not only diligently looks after the numbers, he kindly donated his travel budget to me this year. Yep. And I'm sure the family are delighted about that, Mark, so thank you. However, it does mean that I do get to interact with all the hard-working Computershare staff around the world who give so much towards the success of your company. And as both a manager and a shareholder, I'm very grateful for their contribution. I will now pass back to Simon, as we'll be taking questions from the floor before moving to the formal business of the meeting. Thank you very much.
Thank you, Stuart. Exciting times. The intention is now to take general questions from our shareholders, and once again this year we'll be using electronic voting in regards to the items of business at today's meeting. You were given a handset as you entered today, and that will be used as a microphone if you wish to ask any questions. When the floor is opened to questions, you'll see a prompt on your handset that asks you to join a queue. If you wish to ask a question, simply press the microphone button situated to the left of the keypad screen, followed by the green confirmation button. Make sense? You'll receive a confirmation that you're now in the queue, and your name will appear in a list on the monitor I have here in front of me. When you're asked to speak, your handset will automatically activate. Please speak into it as if it were a normal microphone. When asking your question, please stand, state your name, whether you're a shareholder or a proxy holder, and speak as clearly as you can. Once you've asked your question, your microphone will be deactivated, and if you wish to ask another question, simply repeat the process to join the queue. I'll now open the floor to questions. I'm not surprised, Mr. Tom Rado. Welcome, Tom. Nice to see you.
Thank you, Mr. Chairman. Thank you, Mr. Chairman. I'm surprised that nobody else jumped in front of me. I was waiting before I pressed the button. Anyway, as introduced by the chairman, my name is Tom Rado. I'm a shareholder, and I also represent the interests of the Australian Shareholders Association, an independent, not-for-profit organization representing retail shareholders and looking after the interest of retail shareholders. With me today is Merv McDougall, who will look after what I've been doing in the last 4 or 5 years. And also here another Australian Shareholders Association member, Rod Mackenzie, sitting next to him. So if there are any people here wanting to know who we are, you can ask them as well as myself. Mr. Chairman, about 3 weeks ago, we had a meeting here with yourself, Mark Davis, the CFO, and Darren Murphy. And we went through the financial statement, and we posed a number of questions. And most of the issues that we raised, or nearly all, were satisfactorily covered either by yourself or the CEO. So I won't elaborate on that. I take the opportunity now, Mr. Chairman, to put to you that with this technology, especially for this company, which operates internationally, we're having a meeting in Melbourne, in a suburb of Melbourne. There's nothing wrong with that, but the tendency to have meetings like this virtual, online, so people, wherever they are on this globe, can tune in, but more important, can participate and vote. It's called virtual meeting, as well as having a physical meeting. I believe that the term hybrid meeting has been coined by now, and next week a company which does somewhat similar activity than this company will hold a hybrid meeting. The question I would like to ask through you, Mr. Chairman, do you see that this company will perhaps move very shortly to have a hybrid type of meeting. The ASA will welcome a hybrid format, but definitely not a virtual-only format.
Okay.
Thank you, Mr. Chairman.
Stuart?
Thanks for the question, Tom. Much appreciated. Computershare was actually first to market almost over 7 months ago. We worked with a client and utilized an app for voting at their AGM in lieu of both the handheld devices. So it is a product that we've worked with our technology partners, and we have. From a Computershare perspective, we actually enjoy the interaction physically with our shareholders, so we also agree that we don't want to do a virtual one only. The current virtual AGM technology, and including the one that you referenced that will be happening in the next week or so, has a little bit of a challenge in so much that when people are asked for a poll, those that do not have the smartphone who are physically in attendance will be handed a piece of paper therefore you'll not get the instant poll results that you're used to at the meetings with the devices. So Computershare is working with our technology partners, and we intend to roll that out early next year for next year's meeting seasons, where regardless of whether someone has a smartphone or not, we can run a hybrid and also collate all the votes at the poll and get that tally immediately like we're used to today. At the moment, it's a little bit clunky and inconvenient. But we're there. We have it.
Thank you. Dr. John Donovan.
Thank you, Mr. Chairman.
Welcome.
Obviously everyone knows my name, and I speak as a shareholder in my own name and also in addition my superannuation fund. It's very hard, and I'd say in fact impossible, for normal shareholders to be able to compare one region with another. One region and also the individual countries, how the figures compare year on year, except for the US and Canada, because they only operate in one particular location. So the first query is, with the other areas, do you, as far as revenue and profit and all that sort of thing is concerned, do you translate the individual countries' financials straight to US dollars, or do you translate it to a regional currency and then to US dollars? So in other words, two transactions. And the next point is, in trying to make some sense of performance, it's nigh impossible, so that if we look at staff numbers, now that's the only way that I can simply see how a particular area is going. Now on page 26 of the annual report, there's 12,600 odd staff listed, excluding India. Yet in the regional and global overview, you mentioned 15,200 including India. So does one conclude that there's 3,100 in India? Salient changes of staff numbers, 15 versus 16. The UK has increased by 63%. That, I presume, is largely due to the what are you calling UK asset resolution contract.
Right. Yep. Correct.
But the European numbers have reduced by 50%. I presume part of that is due to Russia.
Yes.
Canadian staff numbers have gone down by 10%. And more importantly for most of us here, Australasia has gone down by 1/3. And in each of Europe, Canada and Australasia, there's been a fall of revenue and EBITDA. And these sort of combinations are disturbing to me. That really doesn't indicate, in certain areas, a company making progress. I know that a lot of justification will be made for currency fluctuations, but the shareholder has no idea how any of these figures are arrived at. And there surely is a better way to inform the retail shareholders. So I welcome your comments and answer.
Okay.
Thanks, Mr. Chairman.
Go through those in two ways. The first thing I'd say to you is we have endeavoured, if you look at the market presentations over the last couple of years, to put more detail in about business lines to allow you to see some changes in business lines with the commentaries there. So some of the numbers you were talking about, for example, in Australia, the reduction in headcount in great degree is due to the loss of one major client in our service works business, Alinta, and the reduction of people that came with that in the AGL. So there are stories behind all of those. Quite a lot of them are in the presentations. But firstly, before I do that, let me just ask Mark Davis briefly just to talk about the translation issue.
Thank you, Simon. With the financial results, we translate the profits from the local currencies on a monthly basis, and then we also publish the exchange rate that we use in our management presentations, both on a half year and a full year. But to aid investors, you'll also see in our management presentation, when we release our results, the local currency revenues by revenue segment across all of the major regions in the local currency. So you can see without any FX noise how the regions are performing business revenue segment by revenue segment. The issue of FX is one of translation in our organisation. Our Australian business, for instance, has Australian revenues and Australian costs. Likewise in Canada, likewise in the UK. But when they translate at different rates to the US dollars, which is our reporting currency, it does lead to some volatility. But to break that down, there is quite considerable detail in the appendices of our management presentation. I'd be happy to take you through that after the meeting.
Stu, would you like to make any other comment?
No, I think that's...
Okay.
I mean, Computershare is certainly far larger and complicated as it's grown over the years. And we have been doing a lot of work to try to present it a little bit more simply rather than going through country by country by country. And we'll continue to improve that, and really appreciate that you're finding it a little bit challenging to do some of the comparisons, and we'll continue to work to try and be more transparent.
Thank you. Any more questions? If not, the first item of business relates to the tabling of the company's financial reports for the year ended 30th of June 2016. And shareholders may ask questions concerning the financial statements of the company. Shareholders are also entitled to ask questions of the company's auditor, Anton Linschoten, who is here from PwC. I now invite shareholders to put questions to the directors or the auditor about the financial statements. If there's no questions, I may propose to proceed with the first of 4 resolutions to be considered today. I appoint Joe Tombino of Computershare Investor Services as the returning officer. We'll be conducting the vote for all resolutions, as I explained, by using the electronic voting system, and I'm calling for a poll on all resolutions. Once the voting begins, your options will appear on the handset screen. To vote for the resolution, press 1. To vote against, press 2. Or if you wish to abstain from voting, press 3. Confirmation that your vote has been received will appear on the screen. If you wish to change your vote, simply select a new option by pressing 1, 2, or 3, and if you wish to cancel your vote, press the X button. Any appointed proxy should vote using exactly the same method. This will cast any open votes you have available. The system will also ensure that any instructions given to you by a shareholder will also be cast as directed when the poll is closed. When the poll's closed, the results will be shown on the screen behind me. showing the combination of both the votes cast in this room and the proxies and direct votes received prior to the meeting. As always, we will do a test resolution, and given we are about 1 hour away from the exit polls in the American election, we thought we would do the first exit poll here today to give the Americans a taste of what they're going to get. So today's test resolution is that Trump will be the next president of the USA. The poll is now open. To vote for the resolution, press 1. To vote against, press 2. Or if you wish to abstain, press 3. Has everybody who wishes to vote done so? I now close the poll. I think Joe Velli will be pretty happy with that outcome. 87% Trump. On that basis, the resolution would have been carried. God help us. That's right. Yeah. Please note that the result only displayed the votes that we have in the room. We didn't ask all of the shareholders the same question. When we come to the formal items of business, the result you'll see on the screen will be a combination of the votes cast live today and any proxies and direct votes received prior to the meeting. Now that you're familiar with the technology, well, I hope that you didn't make errors in the last one, we'll move to consider the first resolution. The first resolution for consideration relates to the reappointment of Les Owen as a director. Les is due to retire from office and, being eligible, presents himself for re-election. The board unanimously supports Les's re-election and recognises his contribution to the board. I move the re-election of Les Owen as a director of the company. Is there anybody who wishes to speak to this resolution? If there's no questions, I'll now put the resolution to a vote. The resolution and a summary of the direct votes and proxy votes received now will appear on the screen. Please enter your votes now on the keypad. To vote for, press 1. To vote against, press 2. And to abstain, press 3. Has everybody who wishes to vote now done so? I now close the poll, and the results will now appear on the screen behind me. Congratulations, Les. I declare the motion carried and congratulate Les on his re-election as a director of the company. As the next resolution relates to my re-election as a director, I propose to vacate the chair and to hand the proceedings back to Mr. Morris.
Thank you, Simon. I never thought I'd have the opportunity to do this again. So, welcome everyone to Computershare's AGM. Very strange situation for me. First time. Firstly, I'd like to welcome, as usual, the lovely Mary, who's been just about to everyone. Another gentleman, Stuart Oldfield, who I don't know if any of you know. He used to be a journalist with the AFR who covered Computershare in the very early days. I think Sandy remember that one. Especially true in the really fun days in 2005 and that when we did downgrades and all that sort of lovely stuff. But he stuck with us and good to see you again. Also Sandy Murdoch, our chairman, who we haven't seen for a couple of years, who was our first chairman at Computershare. Great to see you here. One thing I'd like to say, a sadness, as some of you may not know, Barbara Dunn, who was my PA for 34 years, and we used to call her the mother of Computershare. She died earlier, about 4 months ago, so it's a very sad thing for that Barb's not with us. Must be doing, Mr. Irving must have done a great job, because the shares are up to $10.84 at the moment, just from his presentation. But I'd like to, on behalf of especially my children who will get my inheritance, like to thank Stuart and keep me in the manner I'm accustomed to. But Stuart and his management team, and in fact all the staff. I mean, just talking to Sandy, and Sandy said exactly what I said. You know, it was pretty easy when we did it. We had all this beautiful margin income, and they used to do takeovers and privatisations and everything else. The world is a totally different place these days. So I think what Irv's done, and beforehand Cros, have done an actually magnificent job to actually maintain the EBITDA and the revenue and that, basically without the margin income, which was a sort of a free kick. Hopefully he gets the chance one day and interest rates go up and everyone will think he's a hero. Anyway, the other thing I'd like to congratulate the chairman. He took over for me. He's a lot more diligent than I ever was, and has done a great job. And I think, great companies, which I'm really proud and love Computershare, but great companies, they're not all about these governance statements and all that bullshit, really. I know bad people will make bad decisions. Computershare has got really good people. It's got a great board. It's got great management. And we're about people, and that's why Computershare is a great company. Now, I better do what I was meant to do. And the next resolution is the re-election of Simon Jones. Simon is due to retire from office and, being eligible, presents himself for re-election. I move the re-election of Simon Jones as the director of the company. Is there anyone who wishes to speak to this resolution? Doesn't seem to be. If there's no more questions, I put the resolution to a vote. The resolution and a summary of the direct votes and proxy votes received now appears on the screen. 99, right. Please enter your votes now. Type 1 for, type 2 if you're against, and 3 to abstain. Everyone push their little buttons. Okay, has everyone done? I now close the polls. The results appear on the screen, and they are. And Les beat you, Simon. Somebody doesn't like you. Mustn't have. I think that's all I'm allowed to do now. I declare the motion carried and congratulate Simon on his re-election. I'll pass back to the chairman.
Thank you, shareholders, for that vote of support. The next resolution is the consideration of the company's remuneration report. The Corporations Act requires that the AGM, a resolution that the remuneration report is adopted, is put to a vote. The vote's advisory only and will not bind the company or the directors. The remuneration report is set out on pages 32 to 43 of the annual report. It sets out the policy for the remuneration of the directors, the CEO and other designated senior executives, and details how their remuneration is structured. It also contains remuneration details for the directors and senior directors for the period ended 30th of June 2016 and the comparative periods. I move the adoption of the remuneration report. Is there anybody who wishes to speak on the resolution? If there's no questions, I'll put the resolution to a vote. The resolution and a summary of the direct votes and proxy votes received now appears on the screen. Please enter your votes now. To vote for, press 1. To vote against, press 2. And to abstain, press 3. Is everybody who wishes to vote done so? In which case I now call the poll closed, and the results appear behind us on the screen. I declare the motion carried, and thank you again. The last resolution for consideration is to approve a grant of performance rights to our CEO, Stuart Irving, under the terms of the company's long-term incentive plan. Approval is requested from the shareholders under the ASX listing rules to authorise the company to grant equity securities to the CEO under an employee incentive scheme, and full details of the terms of the issue of the performance rights are set out in the notice of meeting. I move the grant of performance rights to the CEO, Stuart Irving. Is there anybody who wishes to speak on this resolution? There's no question, so I'll put the resolution to a vote. Again, the resolution and a summary of the direct votes and proxy votes received now appears on the screen. If you could enter your votes. Again, for, press 1, against, press 2, abstain, press 3. Has everybody who wishes to vote done so? In which case I now declare the poll closed and the results now appear on the screen behind. I declare the motion carried. Ladies and gentlemen, that concludes the formal business of this meeting. If you could leave your handset and your smart card on your seat, and we'll collect them. We have tea, coffee, and light refreshments available. Thank you for attending this morning's meeting. We will be here to chat to all of you as you wish for a while, so look forward to doing that, and I declare the meeting closed. And again, thank you for your support and your attention. Mr. Murdoch.
Mr. Chairman, I would just like to reiterate what Chris Morris said about the performance of the company. When I was involved some years ago, we did have the wonderful, marvellous margin income, which was very helpful. But the world has changed, we know, and I think that from a shareholder's point of view, the board and the management have done an excellent job in adapting to changed circumstances. We've never been through a period where interest rates globally have been so low, but with adaptability and the use of new technology, I think the board is to be congratulated, and particularly Stuart and the team for the results they have achieved. And looking forward, it's amazing where the increased revenues are projected to come from. I think it's really an endorsement of the management and the team of people that comprise Computershare, and you are all to be congratulated. Thank you.
Thank you very much, Sandy. For those of you who didn't know, that was Mr. Sandy Murdoch, who was the first chairman of Computershare as a publicly limited company. So those nice comments, Sandy, are super appreciated, especially coming from you. So thank you. Thank you, everybody. Tea, coffee, soft drinks over here, and we look forward to talking to you. Thank you.